Precious metal losing its luster as it posts its longest losing streak since 1999. Breaking down the move this year is a man who never loses his luster, CNBC's Dom Chu. Hi, Dom.
Well, Melissa, the luster does require constant polishing, so there is that. But talk about a hot to not trade and all in the same year. Now, I remember earlier doing a lot of these reports early in the year about the strong upside momentum in gold prices and, of course, gold mining stocks. But things have reversed course and in a big way. So let's start with the gold prices. We ended 2015 around that 1050 mark for gold prices, and it was off to the races. We got to near 1375 plus by midsummer. And that 30% jump led to an even crazier move higher in gold mining stocks. So take a look at the VanEck Vectors Gold Miners ETF, that ticker GDX. It ended last year around $13.72. It got as low as $12.40 at the January lows. But by mid-July, we're talking well over $31 a share. That's a 130% gain year to date. But since then, it's been downhill for both gold prices, which are 17% off their highs, and of course the miners ETF, which is down nearly 40% from those highs. Now, the silver lining for the gold trade is that we're still on track to close the year higher than it started, and if that were to happen, we would break a 3-year losing streak for gold prices. The strong upside move in the dollar has hurt gold, as has the lack of demand for that safe haven type investment. So, Melissa, as we head into 2017, gold will certainly be a trade to watch. And I will say this, I am off next week. So, Melissa, guys, I just wanted to wish you guys all Merry Christmas, Happy Hanukkah, and a Happy New Year. See you guys later.
Same to you, Dom. Thanks so much. So could the gold slide present a golden opportunity? Chart masters over the smartboard to break it down.
So I just want to start with the superlatives. It's always fun to say best or worst. For instance, this was the worst weekly decline in 12 years, and yet the first half of the year was the best first half in 40 years. So which superlative is more important? Biggest first half in 40 years or worst weekly decline in 12? I would say it's the former. But let's put this all in perspective. And then I've got a superlative to end this little segment here. I want to start with a couple reference points. Gold versus the S&P from not just random, from the exact market peak in October of 2007, the prior bull market. Which line's ahead? The blue line. How about from the 2000 peak? Which line's ahead? The blue line, and it's not even close. In fact, 20 years, they have done exactly the same thing. Anyone who thinks, and some people do, that gold's not a part of a portfolio, they don't know what they're talking about. 20 years, gold and S&P. Now, the opportunity now is that, of course, since the bear market low, the exact low, March of 2009, we have this huge divergence. And so what I'm thinking now at this point is it's so hated, down 12 weeks, a big run and so forth, that it's time to maybe be contrarian. All right. Here's the chart. If you wanted to draw a head and shoulders top, you certainly could. But in many ways, it's broken. It's met its objective. And we're getting back to where there is some support. So I'm thinking at this point, and yet, even though this is the one-year chart, year to date, even though it's done all this, here's a superlative for you. There are 130 sub-industry groups in the S&P. Autos, computers, beverages. Guess what the best performing sector is this year? Subsector. Top 10. Copper. Heavy trucks and machinery. Construction materials. Alarms and securities. Keep going, up 47. Metals and mining, that's like steel. Semis, we know that's up 50. Number one. So despite all this, the best single thing you could have done, picking stocks in the S&P, is to pick S&P 500 gold.
So, Mike, what's your take on GLD?
You know, I mean, I don't think it is an investment, but obviously the dollar has had a strong run, and if the dollar weakens at all, then I think that's obviously going to be a positive for gold. I think we've talked about this already, and that is that going through the holiday, you probably want to use option strategies where you're selling something to help offset the cost of what you're buying, and I'm not interested in selling puts here because I feel like I'm reaching out to catch that falling knife. So I was looking at the February 108 114 call spread. You could spend about $1.95 to buy that. So a little less than 2% of the price of GLD right here to make your bullish bet. That's all that you're risking. If it just trades sideways, a lot of the decay that you're going to experience in that 108 call will be offset by the 114 you're selling. if you want to try to look at a situation to sell puts in this, you're probably going to want to wait until it drops a little bit lower, I would think.
Dan, you don't often trade gold, but what do you think of the structure of the trade?
Well, let's be honest. I went into the segment wanting to hate on it, okay? But I'm mesmerized by Carter's charting and some of his conclusions that he drew, and I actually agree with that. I mean, I think there's probably a decent chance that it goes back in round trips, that move where he thinks that support is. But by the same token, I like the idea of Mike defining his risk and getting very near the money protection. If you look at that chart, there were some V reversals over the course of this year that saw counter trend moves to, up 5-6% or something. I think that's what Mike is trying to target here, and I think that makes sense. Early in the year, in Q1, we saw a lot of people, especially in calls, reaching way out of the money and buying out of the money call spreads. Now, that worked, but if you were to do that during the downtrend, you're just throwing good money after bad. So I like Mike's strategy, and I think Carter's charting makes a lot of sense.
For a moment of disclosure, there is only one stock in the S&P 500 gold sub-industry. It's Newmont. But if you were to look at a broad index like the XAU, which has got many dozen, it's still his best performer.